Now, as we turn to Europe, I think it's important to talk about what happened in the Bank of England, in the UK in general. And as we said, there was that massive tax cut back to the biggest one since 1972. But you had a huge shift in what the expectations were on the BOE, the Bank of England side, and those underlying problems. And when you look at the weak GBP forcing the steep hike expectations, that's where the big steepening at the front end as aggressive rate hikes are priced in, because they've said, look, we're going to step in, we're going to buy some long dated bonds, but we have to step back out. And that's the biggest thing, where when you look at the UK 10-year government bond yield, you can see it made a massive rally. The BOE stepped in, it dropped, but now they've warned people we're stepping back out, and it's gone right back to where they stepped in. And that is an underlying theme that we continue to see, and those problems that are just really hindering, where the central banks no longer have the bandwidth to stay in the market. And that's what we've been talking about, and why we kept saying they have to pull back, they have to get out, they have to start tightening, because if they don't, they're going to lose the ability to stay in for a meaningful time to bring things back into control. And here is a perfect example. So then when you look at the gilt sell-off, sends yield back to the crisis levels, and that's when, again, the BOE starts the intervention. And now Bailey warns pension funds, like, you guys need to clean things up, because he stepped in because they were saying that within several hours they were going to be insolvent. And he gave them the opportunity, the time, and now here we are with that. If you're not out now, there's nothing we can do to save you, which is going to be a bigger problem. And then turn to, well, does the government have to step in? And if they do, how do they issue the debt to support that? So now when we turn to the Eurozone investor confidence went from negative 34.7 to negative 38.3. And then the Eurozone composite PMI versus the Centex consumer confidence, you get an idea that, again, there's that downdraft. Like, there was a slight pause in the consumer confidence lower, but not a meaningful pop. And now we are right back down and accelerating lower, which are some of the underlying problems we're seeing. So now when you turn to some of the German data, and some of this we've spoken about, but the import index is important, because the import price index was expected to be 2.2%. Came in at 4.3% in August, and it's only gone higher since then, given where natural gas prices are, given where diesel prices are. And that's the underlying issue that we see when we look forward to retail sales and industrial production and really exports, because what is going to be the price of those exports, and can they be competitive in the market? Which is when you look at the accounts balance, it has dropped like a rock. So now when you look at the German 10-year government bond yield, it's gone back up to 2.3% and rising. And then when you compare that to the Italy-German 10-year government bond spread, it's something where you continue to see in terms of where things are on just the spread side, and it's going to get worse. And it's just because if Germany is going up to this level, where's Italy going to go to? And at some point, when you look at Lagarde, which is trying to use the anti-fragmentation tool to keep Italy lower, at some point when she yields, you're going to get a huge snapback. And that's going to become a bigger problem when you look at some of those fringe nations, which we think is what the market is preparing for and really testing her to do, because they are stuck in terms of, similar to other central banks where they've waited so long to intervene. Now with inflation just accelerating to the upside, it becomes a bigger problem. German industrial production goes from 97, continues to shrink, with German industrial production excluding construction and energy, again, all moving in the wrong direction. And then when you start looking at, obviously, German retail sales moving down, this is August, so we know how it's gotten worse, leading back to our commentary on how things are going to get worse on the IMF side based on their estimates. Because if Germany's not importing, if Germany's not exporting, if the Europeans aren't consuming, that is going to be a knock-on effect. German import price index, again, shifting back to the all-time highs. as German construction PMI coming at 41.8, as global German construction PMI housing activity 40.5. Again, all of this is just screaming contraction, and why we believe the IMF is still overestimating the slowdown that we're not only going to see in Germany, but also across the rest of Europe, with Eurozone retail sales volume, again, accelerating to the downside. This is August. We know where they have continued to go based on the leading indicators. Global Eurozone productivity PMI, as you can see here, just coming straight down, which is going to pull down real labor productivity and be that headwind on additional European growth. And then the construction price indices for residential buildings and road construction is when you look at just the price overall on what it takes continues to go up, being an underlying problem. And then that German trade surplus in euros, you can see just how it is almost negative. It will likely be negative in the next month or two, and it's already at the lowest it's ever been. And given their import of energy and raw materials and where those prices are going, we see that getting worse again. So that's a quick snapshot of Europe. I know it's fairly quick, but this is where we currently sit right now, and we've been kind of spot on with Europe. So there's not too much to add at this point. But as the new data comes out, which we have some CPI data tomorrow, we're going to talk about that next week. So in the next segment, we have Asia and some of the things that we're expecting in the Chinese Communist Congress.